The slide rule is a rigorous quantitative analysis tool that's designed to dramatically simplify the identification of what I think are the best companies in the small mid-cap UK stock market. We do that by looking at companies on 4 key metrics of quality, value, growth and momentum, looking at them relative to each other and making a quantitative assessment of which ones have got the best prospects. Okay, we created the slide rule because the small mid-cap space in the UK is extremely large and extremely diverse. If you're a fund manager looking at this area, you potentially have anything up to 1,500 companies to look at, and there is no one investment bank covers all of those companies, and there's no consistent research approach across all those companies. Some of them aren't even covered, some of them are covered by one analyst, some are covered by 10. So it's a very badly covered and inconsistently covered universe of companies. The idea with the slide rule is to try and apply a consistent, quantitative and rigorous approach to analysing all of those companies. At this stage, we're doing it as a written product. It's called the slide rule, and we're going to publish this on a quarterly basis. So within that will obviously be updates on our screens, what companies come out of the various screens that we apply here. It will show what are in the quality, value, growth and momentum portfolios and what's in our top 30 robo-analysed portfolios. So that will come out every 3 months. Also within this document, it actually lists all the companies we analyse and what scores they achieve under the quality, value, growth, momentum metrics and what their overall rank is. But if fund managers have got specific or bespoke requests, we'd be very happy to handle those on a case-by-case basis. Okay, the slide rule can do quite a lot of things, but the first primary thing it does is rank the universe of 500 companies that we analyse against each other under all the metrics that we analyse under quality, value, growth and momentum. So we can rank under any of those 11 metrics that we analyse there, or any combination of those metrics. Secondly, we can screen the universe looking for specific groups of companies with specific criteria. So if a fund manager wanted to look for a high quality group of companies or deep value group of companies, or growth at a realistic price, or some sort of screen like that, we can build bespoke screens to do any of that. We've defined 3 specific screens in the note that we've written here to illustrate the point, but we can screen in any which way we want to. What's also useful about the slide rule is that we can get overall market level data. So I'd say the third interesting thing we can do here is explain to fund managers what the overall small mid-cap market looks in terms of a median company size, in terms of its what does the median company do in terms of return on capital or free cash flow or dividend yield or EV to EBIT or other valuation metrics. We can define the universe that way, so we can then compare any given company against the median universe to see whether it's better or worse, expensive, cheaper, has more momentum, less momentum, etc. And then one of the other things that we do is, using the aggregate level data, is we can define 4 key investment portfolios. So we've defined a quality portfolio, a value portfolio, growth portfolio and a momentum portfolio. So you have like a bucket of companies there that you can immediately reference if you're looking for any one of those individual investment styles. But importantly, once you've defined those portfolios, we can then monitor at any given time which investment style is working in the market or not. So for instance, last year, momentum was the standout style that was winning. This year, the one that's outperforming at the moment is growth, possibly quality. It's too early to tell, but we can tell at any given time which style is working. And then finally, we've sort of pulled all this together to define a sort of a robo-analysed top picks portfolio, and it's biased towards growth, then quality, then value, then momentum. So it picks the companies in that order, and we illustrate in our note what those top 30 picks are. So those are the key things we can do with the slide rule today. But in addition to that, we could use to screen IPOs to see whether how they would sit within the current 500 companies in the UK small mid cap. We could use it to look for takeover targets. We could use it to look for companies with high pension liabilities, and so on and so forth. It's very, very flexible. If you're a small company fund manager, you notionally have about 1,200 companies to look at. It's a very large universe. What we've done is we've sort of topped and tailed that universe. We start with companies that are over 50 million market cap, and the largest ones we look are at 2 billion market cap, so it's within that size range. And then out of that, we've taken out investment trusts, we've taken out REITs, because they're not really analysable through a quantitative methodology like this. And we've also removed early stage tech and biotech companies because they don't really have revenues or profits to work with. And we've also taken out exploration, mining and oil and gas companies for a similar sort of reason. So out of all that, you get down to a group of companies which is just under 500 names.